Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here July 9th, 2020 with the Forex Market Analysis and Live Trading webinar for you. And we are going to pull up our disclaimer real quick just to remind you that this webinar is for illustrative and educational purposes only. There is no intention here to get you to do anything except to learn about how to trade and potentially actuate things in the future, or incorporate some of our ideas into your trading plans, or we'll see however you take whatever you get from this educational webinar. So we have some interesting trading setups to get through, so you should have read the disclaimer by now. So let's get to our forex-trading-unlocked.com website. Remember to subscribe to our YouTube channel, Forex Trading Unlocked, on YouTube obviously, or Twitch, and also if you do subscribe, then you will be notified when our webinars are going live. So with that being said, let's toggle down. We already have the workstation page pulled up. We're going to go past the numbers. Today, unemployment claims came out, obviously higher than they usually are, but are on a good downward slope as of the coronavirus impact that we've had on unemployment. Today, the dollar index has reversed gears a little bit to some degree. The dollar was under pressure for the most of this week and definitely was getting hit hard today. The euro US dollar, which is the biggest component of the dollar index, as you can see, had made a higher move high today, but now is trading in the lower part of its range and is lower on the day. So let's see what we got going on here. So right now we have a rejection of higher move highs. However, the market is trending higher. Something to note is that we had taken out this previous high right here. This was the beginning of the break, and we had kept this market in a downward trend up until we had breached it yesterday and today. So the question is are we running up against strong resistance, or are we just in the beginning stages of a extended bull move that's about to unfold? Right now it seems like we are running obviously into some trouble on the daily basis. Now remember, it could be just a profit-taking sell-off that's going on this morning, because we have had the dollar under pressure for the past few sessions after the dollar had been strong for a week. So the question is, will this continue or will it not continue? And right now I have to say that we've hit critical resistance or support versus the dollar in many currencies. So we're going to try and find some other momentum. Right now we do not have a trading signal to go off of for the euro, at least on a daily basis right now. So we are negative. The euro US dollar we happen to have an intraday short on, but not for anything that we'd use as for our normal signals. That's for proprietary stuff. So if you're a part of our signal system and follow us that way, then you obviously know what our position is and where it is at. And even that, like, you could check it in real time if you go to our www.forex-trading-unlocked.com website. In the navigation bars, when you pull up products, you go to the signals tab, and it will give you instructions on how to pull up all the information statistics on our signal system and how it's performing. So with that being said, we're now going to jump to the British pound to US dollar and see how the second biggest component of the dollar index is doing. This one has also made a markedly higher move high today. This market has been trending higher for the past week and a half very strongly, and it came off of this bullish engulfing line, which, by the way, if you want to learn how to trade bullish engulfing lines, there's a really good book called High Probable Japanese Candlestick Patterns available on Amazon.com, and through it you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge in the markets. Alright, so let's get back to our live screen here, and as you can see, the British pound is coming off of its highs. It's in the lower part of its range, but yet it is still positive on the day. So there is obviously dollar weakness still prevailing in the British pound, but it's trying to make a turn. Like I said, this could be just a profit-taking move slide against the euro, and which may be going on in the pound as well. So the European currencies really battered the dollar hard, especially yesterday. So for them to have a nice little pullback that would give them a little room, you know, to take a little money off the table, I think that's probably what you're seeing today. I wouldn't, not that this could not be the top for a while, who knows, that was set earlier today, but I think that really what you're seeing is profit-taking sell-off from the rally that has occurred over the past few sessions. It is Thursday, coming off a holiday week, so I'm sure a lot of the dollar bears right now, probably that's what's going on with them. I wouldn't be too overly zealous, especially because we've come into some key resistance. Now, as far as the target for this buy signal here, which is this bullish engulfing line here, we have it while who knows set earlier today, but I think that really what you're seeing is profit-taking sell. Get this off from the. There we go. We had a little feedback going on there. Sorry about that. So the British pound, like I said, is has peaked as far as hitting the short-term target for this buy signal here. Does that mean that the bullish trend is not going to continue? Absolutely not. I mean, overall, we've made higher move highs, higher move lows, higher move high, higher move low. This could be the beginning of yet a very strong bullish move. So right now, if you are a bull, you've got to look for a challenge of this $28.13. Only a breach of this confirms a really bullish momentum that could build over the course of time. Remember, the dollar is under pressure from most currencies this week, and if it is just a profit-taking move, then obviously the bullishness of the pound will be something to try and ride that wave. So I would be in a buy-break pattern for that. But right now, I have to say, I think we're more likely coming into consolidation, because if you look at this, and this is the thing you have to consider even when it comes to the euro and the dollar. Like, even if we have dollar weakness, the reality is we've been trading in this range for how long? And we pretty much, even if we get above this $26.77 area, which has pretty much contained this market, we come right back into it, just like here when we fell below this $21.97. So I think that as a whole, we're neutral. I wouldn't say we're bearish. Looking for a bearish setup or even any preponderance of momentum for the bullish moves. Now, if we can see a sustained trade above this $26.77 area, which we fell just short of, which this is just an arbitrary here. We can bring it down actually to this high right here. So okay, so if you see these highs right here, so we pretty much just poked in right through it today and have fallen off it. So for range traders, I think you're the ones who are going to capitalize off of probably selling into higher move highs right now in the short run. Not that we're bearish, but I think you're going to see some nice sell-offs and a little bit of profit-taking corrections going on. So let's go to the US dollar Swiss. This is another one that radically hit the dollar hard, especially yesterday with follow-through. But look at this one. It made newer move lows today, and this is significant because we took out this low from a month and a half ago. So the fact that we were able to take that out yesterday, we settled above it, and then today we took it out again, and now we're positive on the day. I think that we're starting to see not a bullish consensus happening for the dollar, but it wouldn't be out of the realm of possibility to see a corrective move from today into the next couple sessions for the dollar. Like I said, not being bullish the dollar, but I think the moves have been exacerbated, especially when it comes to the majors. Now let's look at the US dollar Japanese yen. So the US dollar Japanese yen, this one is just trying to disappoint. Every time you think it's going to make a move, it just does nothing. It goes nowhere. I mean, you can see on the day it's pretty much unchanged. The ranges have gotten very tight once again. There's very few momentum swing trade days. I would be used caution when it comes to the US dollar yen. Stay away. That is my suggestion for the long run, or the short run rather. Australian dollar, US dollar. This is one that's been going sideways. Obviously, it's a longer term bull. It has been since the middle of March. Its ranges are tightening. It looks like it's running out of gas, but it's hard to be overly aggressive a bear for this one, considering how strong the momentum has been for this bull market against the dollar. So even when the dollar was strong relatively to like the euro and the pound and many other currencies, because the dollar index was very high just a few weeks ago, look at what's happening. During that whole time, the dollar was losing to the Australian dollar. So this is kind of, if we start to see weakness here, it may not be necessarily because of dollar strength. It may just more be because it's overdone with the Australian dollar, US dollar. Remember, they had some issues with China, both as far as in business and now also in a geopolitical thing that is starting to heat up a little bit. We'll see how that unravels. That would probably bring some chaos to the Australian dollar. As to which way, we'll have to see how that situation unfolds. Right now, we're looking for sideways markets to continue for the Australian dollar, US dollar. Wait for a signal. Don't just jump in and try and force a trade. As the summertime markets, don't eat up your capital by just, gambling. If you want to do that, casinos are opening now, and I think you can go find one near your home, near you. Now, New Zealand dollar, US dollar. This is interesting. While the Australian, these are broken, they're in tandem trading, which has been going on for quite some time. This one obviously is still a bull. It made a higher move high today, as you can see. This is pretty interesting because higher move highs and higher move lows are indicative of what? A bullish market. So it's hard to be a bear here. I think that it may be running out of gas, but overall, this is an intermediate and longer term bull. Short term, it's obviously a bull, and we just made higher move highs, even though we're lower on the day. Very tight range. Most likely meaning that this market is just kind of running out of gas, probably set for some profit taking. But overall, it's a bull. Now, if the Australian dollar falls apart, that doesn't mean that the New Zealand dollar will or will not follow it. They've been trading in tandem when they came to the coronavirus, but now I think they're starting to separate, and you're going to see more and more of that. Does that mean that they're not going to go break or sell off or rally at the same time versus the dollar in the short run? No, absolutely not. But I think we're starting to see divergence happen with these markets. Now let's look at the US dollar Turkish lira. This is one that we always look to, some of the lesser major crosses, to see what kind of movement is going on with the US dollar. As you can see, this market, it has dried up. It has gone nowhere for the past month and a half, basically month for sure. And so I would say that as long as this is going on with this one, first of all, you should stay away from this market to begin with unless you're experienced and you have deep pockets because the spreads are so wide. But right now we're looking at absolutely nothing going on here. It's very odd, though, that the US dollar is maintaining just a holding pattern this tight the way it is with the Turkish lira, in lieu of everything that's going on in the Middle East and around Turkey and then that whole zone. It's a hotbed. Now, US dollar, Mexican peso, let's see what's going on here after the US dollar, or the US president and Mexican president signed their new trade deal that was happening yesterday in the news. As you can see here, the peso has been pretty much in a sideways trade for the longer term over the past 4 months, definitely over the past month and a half. Just a swing trading slightly higher with higher move highs, higher move lows, very, very slight, but they are there. So I think the market is wedging. This is something we're going to have to wait for a breakout. I would look at this little rising support line here, and then we have this downward sloping resistance line here. So this is pretty much the area we're looking for a breakout. We'll see what happens. Right now we don't have a signal. Then we have the US dollar, Canadian dollar. Let's see what's going on here. US dollar, Canada. So we had been, like most currencies, the dollar had been getting hammered over the past week, or so far this week, especially yesterday when it had come off of finally a little bounce. But now today we made lower move lows, and then now we turned around. So does that mean that we are bullish? Well, you know what? This market has been an overall bear market for a while, as you can see. But the interesting thing, there we go. Interesting thing is we've been riding this downward sloping resistance line. If we breach this, this will be a very good short-term buy signal. So our first level is yesterday's high, and then obviously this last higher move high. So from this low to here, we were at a lower move high to higher move low to higher move high. Now, this could be considered a higher move low also off of this lower move high. So no matter what, we're looking at a period of potential sideways trading. And I would use this low here as your basis for a breakout to the downside. Interestingly enough, this market had obviously started this rally with a bullish engulfing line. This market is continuing to buffer against this downward sloping resistance. And I think that the fact that this has held this little area over the past week and a half, just buffering below it and trading into it, by attrition we're going to cross this line. So we don't need a rally to get above it. We just need time. But if we do get price to get above it in a shorter amount of time, that would be significant. And the same is to the downside for a failure. So your trading band is $1.3485 up to $1.3727. A breakout of those areas and then we're keying that off of that for a new directional move. Anything inside of that, we're looking at more of the same choppiness between this area here of basically $1.35 even all the way up to $1.3726. So now let's go back to the euro US dollar, which is where we started this webinar off with. Now let's see, do we have any questions in the chat room? We have no questions in the chat room, so we'll still wait another minute or so, give you guys some chances to send in a little question if you want. So the euro US dollar, as we can see, is pretty much still contained in this lower part of the body of the candle for today's trading. So it's off of its lows, but it's definitely still hitting resistance, and it looks like it wants to stay negative. Remember that once again, the euro and the pound are the two biggest components of the dollar index. And think about this, as we have a flattening of the Turkish lira for one, and even with the Mexican peso, we don't really have very much volatility or movement with that one. As these things start to slow and the majors become more important as far as which way we can infer direction as far as with the dollar index. Right now we have a lot of divergence going on and separations of because the coronavirus, I think, is pretty much off the table when it comes to the forex markets. Not that it's not being factored in, but it's not the whole factor. Like now things are getting back to economic numbers, geopolitical stuff that's going on, just the mere demand for money too, and then also the fact of we have interest rates. Most people have, if you check out our video from yesterday, or if you check out our video, our interview spot on tfnn.com from yesterday at 9:40 Chicago time, which would be 10:40 on the bull and bear market hour. We discussed that about what's going on with the credit markets and the interest rates, and how we are already in a pre-panic mode that we had gone through in 2008. So for those of you who have been trading for a while and know your history, there's a lot of indications that we have some issues coming up where we're going to get a currency move one way or another. With the euro dollar, now when I talk about the euro dollar futures now, it's not the euro currency like what we're looking at right now, the euro versus the US dollar. When I'm talking about the euro dollar, I'm talking about the euro dollar futures contract, which is an interest rate, short-term interest rate contract. And for those of you that are unfamiliar with what that is, a euro-dollar contract or euro-dollar rate is the interest rate paid on American dollars on deposit in European banks. Now, in the height of the 2008 crisis, when Lehman Brothers collapsed and then we had the banking debacle, the euro futures in the front month averaged right at 99.75, which is just a quarter off of zero, basically par value. And the thing is they can't go below that. They're not going to pay you money to hold money in a bank in Europe. So even though we are pushing theoretical negative rates when it comes to our bond market and our shorter term rates, we're not negative. We're almost there. If you want to incorporate on a tax and inflation basis, we pretty much are at negative interest rates and have been for quite some time. But that's debatable. These are components that matter though because of the value of a dollar or a currency. So that's why I'm bringing this into the video. So you're probably wondering, what is he babbling about? And that's what I'm babbling about, because that's how you figure out the pricing and value of currencies with one variable, which is the interest rates. So it's very interesting to see where we're at with that. I think that we're going to see some very interesting action. And the reality is with the euro already at this rate, which it took almost a year to happen back then, it did it within months, and we are just in the beginning of this cycle where we're potentially going to have another banking situation, dissimilar from what we had the last time. However, the next one I think will be a little bit more impactful, because everything else is just so much more affected now by this. So that being said, the euro is probably going to remain in this holding pattern. Don't expect much. I think that the pound may be where you might be able to still find some strength. The thing is that the dollar, I think, is, as much as they try and hammer it, there's also reasons to be buying it, you know. So, and especially with the interest rates factor that's going on. And here's another thing to think about. Back in 2008, interest rates were high, and to give you an understanding how I was talking about the short-term rates where those went to zero, long-term rates weren't that low. I mean, they were still at record lows at that time, but if you think about it, now mortgage rates now are at their lowest point they've ever been in history, recently touching in the low, I think it's like 3.1% or something like that. So the mortgage, just by understanding that predicament, is that when we had a crisis, mortgages were going off at over a percentage point, actually 2% higher than they are now. So now we are in a much better situation when it comes to that kind of financing, but there's not much room. So that spread will start to cause a lot of little ripples that will eventually hit the currency market as well. Just because, like I said, the short-term rate is now for the euros is already locked at next to zero already. So that means it's not moving. It's the one thing that you can almost count on for sure, is that market probably, unless the coronavirus magically disappears and the dollar, there's way too many components and moving parts that have to happen before that disappears. And you can even see it on our website. You go to forex-trading-unlocked.com, and when you look at the markets tab, it has futures, and you look under the futures, you pull that tab up, and then it'll have the underneath, it'll have 30-year, 10-year, 5-year, 2-year, 1-year, the bund, the babel, but it will also have the euro and the interest rates, euro dollar interest rates. And that's what you want to take a look at, because as long as that stays where it's at that zero, basically almost zero mark, that's going to be it's going to impact how the other rates move globally, because that one is fixed. It's not going anywhere. And normally that has a little bit of a fluctuation, a little bit of a play. So that's going to lock. It's going to sway certain trades and certain option and futures spreads, as well as impact currency movements because of it. So it'll be interesting to see how that manifests. I'm looking for, now short term, I think we're going to be a neutral to somewhat, not very bearish to bullish sideways trade for the dollar index and the dollar as a whole versus most major currencies. However, as gold does continue to make new highs, and if what I'm talking about, the interest rates really is, if we're basically back in for the fall of 2008, and that was March of this year, that means we have a 3-year period where gold has the potential to get up to $3,000 an ounce or more, maybe even as high as 3,800. The euro has a chance to get back into that $1.20 area, whatever, maybe even $1.30 for a little bit, and the pound could probably rally, and all the currencies could rally against the dollar for a while. So we're looking for basically a 10% to 20% correction in the dollar from where it's at now, spiking around and swinging around over the next 2 to 3 years. So not that there won't be periods of dollar strength, and I think you're going to, and you always have your biggest rallies in a bear market. So if we have an eroding dollar, that's going to lift all the other boats, if you will, against the dollar for the short run, and then it'll start to get choppy and bouncing around, because where some of the lesser currencies may be able to gain significantly against the dollar, I find it really hard to believe that the euro, since they don't want a high euro against the dollar, or dollar versus euro versus dollar, and the pound also, we have new trade negotiations that are going on and what have you. So we have to see how this pans out. So we still have the euro US dollar sitting here at 113.02, and let's take a look at the British pound US dollar and see if this one has finally gone negative on the day. Remember, this one was slightly positive. Yeah, it's going nowhere. Of course, we're heading into lunchtime, so it is Thursday. We're coming off a holiday. We've had a nice run. The dollar's been beaten up, and right now, even still as we speak, the dollar index is still under pressure versus most currencies, except for the euro, obviously. And we can look at the U.S. dollar Swiss real quick for another glance just to see what happened. And this one, too, it's holding its own. So that looks like what we're seeing now is that, yeah, yesterday, or the trading off today, was the dollar got whacked early. Lots of follow-through momentum, because yesterday the whole market was jumping on the dollar. And now it seems like that we had follow-through today, and it is now disappearing. So not that we're going to become a dollar bull, but I think we have a short-term, nice little profit-taking setup that we have to be just mindful of. So with that being said, make sure you subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns on Amazon.com in Kindle and paperback versions for your educational reading pleasure on the markets. With that, I want to thank you very much. You have a great day, and